Alrighty, so this is the S&P ESM 2024 contract monthly chart. We just finished up the dollar, and I took a quick little break before getting into this one. So let's not waste any time. And well, before I do get started, I forgot about the other one because I was so excited about the analysis. This is not trade advice. I'm not a financial advisor. Do not buy and sell based off of anything I'm saying. And please protect yourself and do your own research. So the monthly chart, obviously we have a new month. It is April in Confluence. It is also the second quarter of the year, so that has officially begun, so happy second quarter. Now, first thing on the monthly chart, I always like to mark out the previous month's high and the previous month's low because that's a constant, meaning it's always, 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 always there, no matter what. And one thing I have been looking at is this negative 0.5 right here, standard deviation at 5274.5. If you take the monthly lows down from here in, I think it is November, around that time frame, you can't see it on the chart, but from here all the way up to here, take the negative 0.5 standard deviation, extend that out to the right. We have traded up into that and a little bit further above. So in terms of looking at a quarterly shift, this would be a nice point. We didn't see a close below that, but there's really no necessity to see a close below that. The weekly chart, once again, another constant that will always remain in my analysis is the previous week's low at 52.63 and the previous week high, which I cannot see right here, and I do not have my notepad set out and written out yet. I'm going to do that after. But we also have the previous month's high. So note this March 18th to 22nd premium with consequent encroachment, which was traded to and through. I'd like to see this revisited, so now as a discount array, and I'll show you why on a lower time frame. We have the Sunday opening, and you can see up here that the analysis was done technically yesterday, but at 21:40, so that's Sunday's opening. So you can see that we've opened and we've traded above the previous week high and above the previous month high. And below we have the March 18th to 22nd fair value gap BISI, so buy side imbalance, sell side inefficiency. So I actually do like this imbalance as an objective, the high specifically, which is also with the previous week low. So basically 52.63 flat. I like that. That is my weekly draw that I am going to be observing and I'm going to be watching and measuring. On the daily chart, a lot of things here. Obviously that weekly buy side imbalance, sell side inefficiency transposed down to the daily chart lines up in confluence with this daily Wednesday, March 20th inversion fair value gap, which I have labeled as inversion, but it is yet to do so. I labeled this and I was watching this at the beginning of the week, so Sunday going into Monday, and you can see that these 2 days it perfectly used the high as inversion, so right here and here, and then it instantly, after trading to consequent encroachment, rallied up and above, not booking the previous month high, but on Sunday trading up into that aggressively, which you'll see on a lower time frame, but trading to the premium with consequent encroachment from the weekly chart on Wednesday. So, and keep in mind this is a Thursday. So I had wanted to see this high protected actually. I like the idea of topping out on Thursday, but we didn't really see that. But that doesn't remove or negate my idea of lower prices, I'd still like to see lower prices. And note these 3 down close candles, which I'm actually just going to read off my notes so I don't forget anything. So I wrote, note the 3 consecutive down close candles from March 22nd to March 26th. Should we trade down to the weekly March 18th to 22nd fair value gap BISI high, or the previous week low, which is the same thing? Thinking a little bit ahead in time, that could set up the possibility for a bearish breaker that would lend well to the idea of a beginning of a new quarterly shift and upset the current sentiment in place of bullishness. So on the daily chart, you can see that from here all the way up to here, we kind of have this trend line liquidity. So I would like to see a high, low, higher high, and then for this to now start trading lower, shift below here, so a shift in market structure, and then using this already marked out PD array as resistance, and then start to make its way down lower. If you look at this fair value gap, the Wednesday, March 20th inversion fair value gap, the way I look at it is from Model 22 mentorship, ICT taught the fair value gap as a 3 candle pattern formation. So 1, 2, 3. And he basically said about stop placement, it should usually be at candle 1 or the nearest swing low. And this is candle 1, and this is the nearest swing low. So if we're bearish, we can use this candle as an objective, and this candle as also an objective. But really for right now, I'm just looking for this low and the previous week low. This is a lot further out, and I don't think it's going to trade there necessarily this week, so April 1st to 5th. I don't think it's going to do that. It's kind of far out. But I am watching this low. And now a 4-hour. You can see that new week opening gap right here. And that's that Sunday opening candle. You can see we shot up into the previous month's high and then closed above it. And the hourly chart, you can see I have those daily dividers again. Monday, Tuesday, Wednesday, Thursday, and Sunday's opening. Shot up, closed above it, went a little bit higher, and now we're just trading off the highs. So if the dollar is to trade higher by Friday's close, so I'm basically saying I'd like to see the dollar trade higher by Friday's close, but I don't know where the closing price will be. I'm just saying I want to see some delivery higher, some extent of delivery higher. And on ES, I want to see, I spoke about my dollar objectives, and on ES, I also already mentioned it, but once again, I want to see previous week low sell side liquidity at 52.63, and that would be a final objective that would make me content. Now, I haven't mentioned this yet, but keeping in mind, or I haven't mentioned it in the analysis yet, but keeping in mind that it is non-farm payroll week, so we have non-farm payroll numbers on Friday. But besides that, I mean, I think we have high impact news every single day this week. So, very busy week. I think it's going to be quite volatile. So currently I'm observing this Sunday opening. We've opened higher and made an attack on previous month's high, creating new all-time highs during Sunday's trading. So very interesting. My personal opinion on this is I would capitalize on anybody chasing the markets going into Monday's opening bell. Anyone who's reading articles right now or is new to price action is highly likely to be tripped into a quote-unquote strong market at the time, possibly see higher highs from their open position, and then be flipped on immediately. So basically, anyone who is new or anyone who is a novice to price action is going to see this opening and this quote-unquote strength, and I think they're going to chase that. And in the process, they're going to be instantly retraced on. So basically what I'm saying in short is any new higher highs, I'm skeptical of, I'm suspicious. So I like the narrative of trading higher during Sunday and walking any impulsive traders to the slaughterhouse by allowing new highs to be formed and engaging those traders long into the marketplace, and then begin working its way lower into discount arrays. So from this screenshot, some nice discount arrays are obviously the Sunday 6 p.m. opening and the new week opening gap, high, consequent encroachment, and low. So once we trade below that and close below that, I would really like to see the new week opening gap act as resistance and then down into that sell side liquidity there. We do have clean, very clean equal lows over here, so very possible for that to be swiped, which would also in the same process book the high, consequent encroachment, and low. So a lot of confluence. But like I said, in short, I'm open to the idea of seeing higher highs being formed, but watching those higher highs as suspect over the great deal of suspicion. I like the current new week opening gap as a low-hanging fruit objective, speaking as of now where the current marketplace sits. So you can also see we do have kind of a trendline liquidity forming. So that's why I like the idea of trading lower. Also, time of year. We're transitioning into the the second quarter. So change in sentiment is to be anticipated, especially after we've traded from where we have opened on January to now. I think it's reasonable to expect a pullback, and on my NASDAQ analysis, which is in the next video, you'll see just like some interesting, I guess, psychological studies that I'm using this week. I just want to talk about this quick little fair value gap. I wanted to see this orange shaded area as inversion, and I was using this SIBI, so sell side imbalance, buy side inefficiency, as a premium array that was going to hold price down. As you can see, we had it trade up into there once, twice, and then come back on Tuesday. And then we traded down to the consequent encroachment, taking out sell side. After booking the consequent encroachment, we traded up on Wednesday and disregarded that SIBI closing above it and then trading higher. So last week was also a shorter week than usual because of Good Friday. So Thursday, you can see it's very just choppy. But if you watch this, I would really recommend watching the next analysis on NASDAQ, because I like that one a lot more, and I'm going to be looking at that this week. So yes.